Don't place a trade based on what you're seeing in this video because trading is risky and it can cause substantial financial loss. There is no guarantees of making money in the markets and it takes you a long time to become a good trader. So be smart about the way you're trading. Also, grab a free trial right now to do a brand new Master Trader Lab monthly. We're going to learn every single month. You'll be learning techniques to help you become a much better trader. Click on the first link in the description below right now. Are we in a super cycle of 75 to 100 years? I'm not sure what you call that super cycle, but if you understand Ray Dalio's stuff, he talks about short-term and long-term debt cycles. We're getting to the point where we're getting to that long-term debt cycle where interest rates are still almost zero, only a few percent, and it's at equilibrium. That's how you know we're getting towards the long-term debt cycle, because they can't, in the past they've been able to raise it to 4 or 5% for it to be some sort of equilibrium. Right now they're just a bit over 2%, and right now what's happening is that it's now hurting asset prices even there. So we're getting almost basically zero and a few percent off that, and so we're getting towards the long-term debt cycle. What does that mean? It means a complete debt reset that's coming over the next few years. Pensions are gonna be affected. Healthcare is gonna be affected. Food stamps, or they basically the same thing over here in Australia. All those things are going to be affected because the government won't be able to assist that anymore, because the long-term debt cycle is all about deleveraging. So all these things are going to be affected. So people, especially the baby boomers that are relying on the government for their funding to live, that's going to be affected over the next say 3 to 4, maybe 5 years. Or probably 2 to 4 years. That's going to start to take an effect. Because that short-term debt cycle, which is the boom and bust cycle, every say 7 to 10 years, and then the long-term debt cycle, which means every single boom and bust, the government gets in more and more debt every 50 to 75 years. They have to complete deleverage, and this is what happened. This is what happened back at the 1937 level. So that's the reason why 1937, if you go look at it, to 1947, this is when we had basically what you call the lost decade, because there was very little growth. It was very painful. And this is what we call like a complete reset in the markets. But then guess what happens? After 10 years, then they start to go through another boom and bust cycle. They start to accumulate more and more debt. And then another 50 years from now, if you're around, you'll see the exact same thing. It's all the cycle. It's all the same thing over and over again. But because how we're getting towards that long term where all these major things that are funded by the government are going to be affected, is that the interest rates can't, let me just go to... how they're going to be affected is that the interest rates, let me just do this here. Oh, easy, Tiger. What did they do that for? There we go. All right, so how we're almost at the long-term debt cycle is, as you know, right, and I'm going to do this green, as the economy's gone boom and bust, so to speak. What's actually happened is, as you know, if you go look at the actual interest rates, you'll notice the interest rates, they may start at 10%, then they drop back down and they come back up to say 7 or 8%. And this here may be 3%. Then they drop back down to 2% and then rally back up to 5%. Then they drop it back down. This is actually 0, what happened recently. And now they just rallied back up here a little bit, maybe 2%, maybe just above 2%. And now guess what? Now that is now above asset prices, which means that is now what you call is now equilibrium, right? So if you look at if you use a line here, you say, okay, this here is when the interest rates are rising. This is when there's equilibrium in the markets before we went through another boom and bust cycle. This is now when the equilibrium in the markets, because what is actually happening through this exact same time, and let me bring up, say, a purple line through here. At the exact same time all this is happening, guess what? The governments are getting on more and more debt. So the more debt they have, the lower the interest rate can be to create some equilibrium before it starts to hurt them way too much. That's the reason why we start to get this point through here, and this, you can see, it couldn't actually get as high as through there. Then this point through here, And this point through here, guys, this point right here, this may be, call this say 10%, call this 7%, call this 5%, call this 2%. And so as you can see, the equilibrium, which means where they can raise the interest rates before it starts to hurt asset prices, gets lower and lower and lower. And then that's the reason why you can see right now, this is where we're getting towards the long term of the debt cycle. The long term of the debt cycle simply means we're going to get a complete wash away over the next 10 years. So the next 10 years is going to be very, very, very painful. That's in black and white. That's the reason why it's going to be very, very painful, because the government now needs, over the since 1947, basically, it started this cycle all over again, and so now it's going to go through. That's the reason why the debt jubilee is in effect, is effect right now, and so on and so forth. Right? It's basically understanding that and going through that, and this is something very, 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 very important for people to understand, is that when you're looking at where the economy is likely to go in the next 10 years, especially in America. This is what's going to happen. Pensions, healthcare, and all that sort of stuff are going to be affected, and possibly, I'm not saying this is going to happen, but possibly another world war, because the last world war came out of the last world war was the 1929 to 1937 level there, and the rise of China and all that sort of stuff as well too, guys. So. There's a simplified, and this is the reason why right now, this is the reason why we're actually tipping over in the stock market. So it's pretty much all down from here, guys, in the stock market. That's not a blatant statement across all stocks, by the way. As you know, the trading is not an easy thing, right? There's so many areas you need to know in order to become a really, really good trader. You've got the foundations, you've got the chart reading techniques, you've got the trading systems, and also you've got the mindset and so much more that goes into becoming what I call a master trader. So I've created a program called the Master Trader Lab Monthly, where every single month I'm going to be releasing brand new trainings and help you understand all of the foundations, the chart reading strategies, the mindset techniques, everything that goes into becoming a really, really good trader. And I'm giving away a free trial right now for the grand opening, and also I'm giving you a kickstart bonus package as well, the foundation to a successful trader, the chart reading techniques and the advanced chart reading techniques, millionaire trader mindset, and a bonus package as well too. This is for the grand opening of the Master Trader Lab Monthly. Click on the very first link in the description below right now to claim your free trial right now.